All right, let's deep dive into Avenue Supermarts, the parent company of DMart. You know, those supermarkets with the crazy deals.
Yeah.
We're going to see how they're doing so well. We got their investor presentation and a brand new press release, plus some board meeting proceedings, all from January 11th, 2025.
It's interesting. We're not just looking at numbers here. We're going to see their expansion strategy and how they're doing online grocery with DMart Ready, and even a big leadership change coming up.
Okay, let's break it down. DMart's known for everyday low cost, everyday low price. But their expansion is more complex than that. The investor presentation shows this cluster-based strategy. What's that about?
It's pretty smart. They started in Maharashtra, built a strong base there, and now they're moving to other states, creating clusters of stores.
So they dominate one region at a time.
Exactly. This probably helps with logistics,
Yeah.
keeps costs down, and they build their brand in a region before moving on.
Makes sense. What about DMart Ready, their online platform? The press release says 25 cities now, focused on home delivery. Is this the future of grocery shopping?
Definitely. The press release specifically says there's huge demand for home delivery. DMart's adapting, even going only with home delivery in some towns.
They're listening to customers. But isn't it risky to only do home delivery? What if people prefer pickup points again?
It's a gamble. But they're likely thinking home delivery is more convenient. We're seeing this trend everywhere, not just India.
Let's talk money. The investor presentation breaks down revenue by category, and it looks like foods, especially staples, and non-foods, or FMCG, are doing really well.
It's a good mix. Foods bring in most of the revenue, but non-foods aren't far behind. This helps them appeal to more people.
Smart. Now for the big numbers. Revenue from operations for Q3 of FY25 jumped 17.5% year over year. It hit 15,565 crore.
Yeah, it's impressive, especially given the economic conditions. The Indian retail market is really competitive.
But wait, the press release says their EBITDA margin went down. Can you explain that? For those of us who aren't finance experts.
EBITDA is earnings before interest, taxes, depreciation, and amortization. Basically, it shows how profitable the company is from its operations.
So they're growing, but making a little less profit.
It's something to watch. The press release suggests that more discounting in the FMCG category might be a factor, especially in the metro areas. Competition is tough. Keeping those margins up is important.
Got it. Now let's talk PT, profit after tax. The press release and financial statements show good growth, but the PT margin's lower than before.
Well, there was a one-off tax benefit in FY23.
So we can't just compare year over year.
Right. We need to look at the bigger picture.
Their earnings per share, or EPS, is at 12.06 for Q3 FY25. That seems pretty good.
It is. It shows the company's making money and giving back to shareholders.
Now, on to some operational highlights. The investor presentation mentions like-for-like growth. What's that?
Like-for-like growth, or LFL, measures growth from stores open at least 24 months. So it shows how well-established stores are doing without the effect of new stores opening.
Ah, like a health check for their existing stores.
Exactly. And it's 8.3% for Q3 FY25.
Yeah,
Shows they're doing well, even in older stores.
that's great.
Yeah.
We also see an increase in total bills cuts, which I guess means more transactions.
Yep. It shows customer traffic and sales volume. More people are shopping at DMart.
Another detail is the rise in revenue from sales per retail business area. What does that mean exactly?
Basically, how much money they make per square foot of store space. Important for any retailer, especially ones like DMart working on tight margins. They need to use their space efficiently.
So DMart's all about efficiency, from their expansion strategy to their stores. But remember that leadership change we talked about.
Yeah, the big news. Neville Noronha, the CEO, is stepping down in January 2026.
That's huge. He's been there a long time, right?
Over 20 years. The press release highlights some of his achievements. They went over 50,000 crore in turnover and expanded from 5 stores to over 380.
Amazing. So who's taking over?
Anshola Sawa. He'll start in February 2026. He comes from Unilever, held leadership roles in India, Asia, and Europe.
That's interesting. Coming from a giant like Unilever could bring new ideas to DMart. What do you think about this change?
It's a bold move. Asawa's experience in FMCG, understanding different markets and customers, could be really valuable. But retail is different from packaged goods. It'll be interesting to see how he adapts.
The press release even has quotes from the chairman, Mr. C.B. Bave, and Neville Noronha himself. What do they say about this change?
Mr. Bavey thanks Noronha for his leadership. He praises his focus on customers.
Okay.
Noronha talks about DMart's potential for growth and how important it is to keep things simple and focus on customer value.
It sounds like a smooth transition, but the board meeting proceedings detail even more personnel changes. Maybe it's more than just a change at the top.
There are new people in senior management
Yeah.
and changes in existing roles. We'll need to look into this
Yeah.
and see what it means for DMart. But first, let's dive into the numbers for this quarter and the past 9 months.
Right. We can't forget about the financials. We'll explore those details in the next part of our deep dive. Stay with us.
Back again for more on Avenue Supermarts.
We were just talking about DMart's growth,
Mm.
and the new CEO coming in makes you think, how will they stay on top with all the competition?
Yeah, that's the question. Remember Anshul Asawa's background. He comes from Unilever. They're huge in fast-moving consumer goods, or FMCG.
Right, but that's not the same as running stores. I mean, I love my Unilever products, but how does that experience help run a supermarket?
It's not as different as you think. He's worked in different markets with different types of customers and products. That knowledge is valuable for DMart.
Okay, but how does that make him a good fit for DMart specifically?
Well, think about DMart Ready, their online grocery delivery. Asawa led Unilever's digital efforts. He knows online business and how customers are changing.
So he could help DMart grow online, maybe offer more products online, or try new technologies.
Absolutely. He might have fresh ideas to make them even more competitive online. But don't forget their physical stores. That's their foundation. Their EDLC, EDLP strategy works really well.
Yeah, those low prices are a big draw. But could Asawa change things up in the stores too?
He might, using his international experience. Maybe personalized recommendations, loyalty programs, or even different store layouts.
Imagine DMart giving you suggestions based on what you bought before. That'd be cool.
Yeah, and that's where Asawa's data skills come in. DMart already uses data, like-for-like growth and revenue per retail business area.
So Asawa could do even more with data. Maybe dynamic pricing where prices change based on demand.
Possibly. He could also focus on their supply chain, making it even more efficient. That's key for keeping prices low and staying competitive.
They're trying to balance keeping things simple with trying new things. But what about the bigger picture? The Indian retail market is tough, lots of competition. How will DMart do?
That's the real test for Asawa. He needs to see what's coming, make the right decisions, keep DMart ahead of everyone else.
I see what you mean. The board meeting proceedings also mentioned a new head of pharma. Does that mean they're going beyond groceries?
It could be. They might try pharmacy, clothes, or even financial services. Build a whole ecosystem around the DMart brand. They already have loyal customers and are known for good value.
That's smart, especially since they focus on everyday needs. Pharmacy fits right in. But what about those challenges with taxes? The financial statements mention appeals against GST demands.
Right, they need to handle those regulations carefully, stay compliant while keeping costs low. Not easy to do both.
So much going on. New CEO, possible expansion, tough competition. Exciting and a little scary at the same time.
It is. And don't forget their current performance. Good revenue, but that dip in EBITDA margin needs attention.
Right, that's a concern.
Yeah.
Especially as they grow and face more competition.
It shows how important it is to manage costs well, which DMart's always done. But they also need to adapt, find new ways to stay profitable as things change.
They're balancing growth, profit, and innovation. It'll be interesting to see what they do next. But remember those management changes.
Yeah, those might tell us more about DMart's plans and how they're setting themselves up for the future.
We're back. We've talked about DMart's growth, the new CEO, and their expansion plans. But let's get back to those personnel changes. What's happening behind the scenes?
Well, you know what they say? Personnel is policy. These changes from the board meeting proceedings give us a glimpse into DMart's thinking and what they're focused on.
Okay, let's dive in. We talked about Mr. Hitesh Shah leading the pharma business. What's the bigger picture with that move?
It shows they're serious about pharmacy. Shah is a good choice, too. He knows DMart. He's been there a while, and his background in FMCG is helpful for managing products and competition.
So they're using his experience, both from inside DMart and from the consumer goods world. But why pharmacy? What's the appeal?
Think about it. People need their medicine all the time, like groceries. It fits perfectly with DMart's focus on everyday needs and their low prices.
Yeah, makes sense. They're meeting a need their customers already have, all in one place. Maybe they'll even offer loyalty programs or discounts.
Could be. Now, another interesting one. Mr. Rajeev Chandrasekaran is the new head center of excellence, focused on process audits. Sounds boring, but it's important.
Process audits. Explain why that matters. It seems kind of internal.
It's all about efficiency, Remember, that's DMart's strength. By improving their process audits, they're really focusing on controlling costs and making things run smoothly.
So they're making sure everything's working perfectly, even as they grow and try new things. Smart way to stay ahead.
Right. You have to keep getting better, especially when the market's changing so fast.
There's also Mr. Ashutosh Dar. His role's changing. He was senior management personnel, but that's changing because of reporting structure changes. What does that tell us?
It means things are shifting internally,
Yeah.
probably to fit with their new strategies. We don't know all the details, but it shows DMart is adapting, getting ready for what's next.
So they're expanding into pharmacy, focusing on improving their processes, changing things up internally, and getting ready for a new CEO. They're not just relaxing, they're making things happen.
Exactly. They're proactive. They're not waiting for the market to change. They're anticipating and making decisions, staying ahead of the game.
It's a great story. They started small in Mumbai, and now they're huge all over India and still growing.
It's because they focus on doing things well, on their customers, and on adapting. Other businesses can learn from that.
We've covered a lot today. Their financials, their strategy, their leadership changes.
And for our listeners, here's something to think about. Watch how DMart uses their strengths, their efficiency, their flexibility, their focus on customer value. That's how they'll succeed in this ever-changing retail world. Their story's not over. And the next part will be just as interesting.
Thanks for joining us on this deep dive. We'll be back soon with another one. Until then, keep learning, keep asking questions, and keep diving deep.